Welcome to the Deep Dive. We pull the most important nuggets from your sources.
That's right.
And today, we're diving into a really crucial topic if you're in the digital asset space.
Yeah.
Surviving crypto bear market.
Super important topic.
Our mission, to arm you with the mindset and the actual strategies you need, not just to get through a downturn, but maybe even thrive.
Yeah, potentially find opportunities.
We've looked at a bunch of different guides, different sources to kind of map out the best path. So first things first, maybe the most critical piece, mindset.
Absolutely.
All our sources, they just hammer this home. Stay calm, avoid those, emotional gut reactions.
It's easy to panic sell, right?
Totally. And that just locks in your losses. One interesting stat we saw suggested something like, over 70% of long-term gains actually came from buying during downturns.
Wow, yeah. That really puts it in perspective.
Right.
And keeping your cool, it's not just about not making bad moves. It's about giving yourself the space to look at things objectively. Making rational choices that fit your long-term plan. You got to play the long game, be disciplined. These cycles, they're just part of it.
Yeah, exactly. So mindset's the foundation. Okay, let's unpack some strategies. Key pillars.
Let's do it.
Diversification. Probably no surprise there, but it's critical for managing risk.
Standard advice, but for good reason.
Spreading your investments, across different crypto types. Bitcoin, Ethereum, maybe some promising altcoins, DeFi, stable coins.
Right. Don't put all your eggs in one digital basket.
Exactly. But some sources actually take it a step further, right? Looking
Yeah.
beyond just crypto.
Yeah, precisely. When you look at the bigger picture, some suggest diversifying into maybe traditional assets too. Things like tokenized stocks.
Right, the digital versions of shares.
Exactly, or even tokenized commodities. The idea is to reduce that correlation risk so your whole portfolio isn't just swinging with the crypto market.
Gotcha, broadening the shield, like you said. Okay, another big one our sources push is dollar cost averaging, DCA.
Ah, yes, DCA.
Now, for listeners thinking, I'll just buy the dip big time when it hits bottom. What's the wisdom behind DCA? Why is trying to time the market? Well, why is it so tough?
That's a great point, because honestly, trying to perfectly nail the absolute bottom, our sources basically say it's, almost impossible.
Right, you'll drive yourself crazy.
You will.
Yeah.
And you often miss good entry points waiting for a bottom that might have already passed, or you might even catch a falling knife, as they say.
Ouch.
So DCA, investing a fixed amount regularly, no matter the price, it just smooths everything out. You end up buying more units when prices are low, fewer when they're high.
Lowers your average cost over time, takes the emotion out.
Exactly. It's disciplined, less stressful.
Okay, so beyond those core things, what about some more advanced tactics or just good practices? Staking comes up.
Yeah, staking, if you're holding long-term anyway, staking your crypto can generate some passive income, help offset potential losses.
But there are risks there too, right? You need to check the platform, the asset itself.
Absolutely. Due diligence is key. Always assess the platform's security and the sustainability of the staking rewards.
And what should people absolutely avoid doing in a bear market?
Well, unless you really know what you're doing, have significant experience, the sources strongly advise against shorting.
Trying to bet on prices going down further.
Right, because your potential losses are theoretically unlimited if the price suddenly rips upwards.
Yeah, those rebounds can be vicious.
They can wipe you out fast. So instead, focus on preserving your capital and actually look for value.
Opportunities.
Yeah, bear markets can be a great time to pick up fundamentally strong projects. Ones with real development, active communities, actual utility, at a discount.
That raises a good question, though. What makes a project fundamentally strong, beyond just hype?
Good question. Sources point to things like consistent developer activity, genuine community engagement, a clear use case or problem it solves, not just marketing buzz.
Right. And speaking of safety nets, security is huge when things get shaky. What about exchanges?
Oh, absolutely crucial. Our sources really highlight this. Get your crypto off centralized exchanges if you're not actively trading.
Pull over to your own wallet.
Exactly. Reduces counterparty risk. That's the risk the exchange itself could fail, which, sadly becomes more likely during major market stress.
Better safe than sorry there.
Definitely. And, the basics still apply. Regularly review your portfolio, rebalance if needed to stick to your plan. And the golden rule, always. Only invest what you can genuinely afford to lose, like really afford to lose.
Don't use the red money.
Please don't. Yeah. Never use funds you need for essentials. Sticking to that one rule saves so much potential heartache and stops you making bad emotional decisions.
So wrapping this up then, what's the big takeaway for you, the listener?
Well, remember, market cycles are normal. They happen.
Yeah, especially in crypto. These downturns are, they're part of the journey, not the end of the road.
Exactly. And this kind of raises that important question for you personally.
Yeah.
How are you going to use this period?
Yeah.
Not just to survive, right? But maybe to keep learning, to really look at your investment ideas again, adapt your strategy.
Turn it into an opportunity.
Precisely. The people who navigate these downturns with a solid, informed plan, they're often the ones in the best spot when things turn bullish again.